segments. Okay. So I have
Thank you.
to record. Okay. So first of all, sir, tell me, do you have any prior experience before joining this course about stock market? What do you know about stock market?
स्टॉक मार्केट के बारे में बहुत सारा जानकारी नहीं है, बस आई एम लिटिल बिट बेसिक काइंड ऑफ गाय. आई वर्कड एज सिस्टम्स एडमिनिस्ट्रेटर लाइनेक्स का थोड़ा अच्छा नॉलेज है मुझे. एंड
क्या सर?
ट्रेडिंग अभी तक किया नहीं. के ट्रेडिंग अभी तक किया नहीं मैंने. आई नो
Trading.
नॉलेज अबाउट सिस्टम्स. यस, I am working as a system administrator. Okay, so कंप्यूटर्स और लैपटॉप एंड सर्वर्स के बारे में जानकारी है, लेकिन अभी तक मैं फिलहाल
आपको
काम नहीं
स्टॉक
किया था.
मार्केट से रिलेटेड
ट्रेडिंग.
आपको क्या पता है, मतलब हाउ स्टॉक मार्केट वर्क्स, आपको उसके बारे में कुछ पता है सर?
यस, थोड़ा सा जानकारी है. सो देयर आर टू थिंग्स. वन इज ट्रेडिंग प्लेटफॉर्म पे रिटेलर्स के लिए दो तरीके के हैं, इक्विटीज और डेरिवेटिव्स. I started reading some books. Okay, so equities long term के ले सकते हैं या short term के swing trading के लिए कर सकते हैं. Derivatives will be like futures and options, like taking a call, like buying future में इतना जा सकता है या इतना गिर सकता है. ट्रेड वो कैलकुलेट करके we will take a call, or you can say it as a they call it as a put or call. Call is for buying, put is for selling. So इस तरीके से, so I know little bit basic because I started reading maybe a few weeks.
No, that is a good thing
So
actually. See, options is a complex subject, right? And actually, to be honest, it is not just about buying and selling. About C means buying and P means selling. It is actually way more deep into that. We will take actually around 3 or 4 sessions only on derivative segment. But those are actually that will come after at least 6 session. Okay. Before that, let me explain you what we will learn first. See, in the first session. Okay. Just wait a minute. Today we will only learn about the basics of the market. Okay, what we use in the market and why stock market was established, and the basic technical key terms that we use in day-to-day trading life. Okay, sir. We trade on the basis of daily basis. So we will be using the terms, whatever the terms we use for that, we will be learning those today. Tomorrow we will start with candlestick, and day after that we will see the different patterns of the candlestick. Okay, first candlesticks, different types of candlesticks, then the patterns based on the candlesticks, and after that session we will learn about the patterns. Okay, let me write all of that here, or should I not? Wait. First will be the introduction of the market. Okay, sir.
okay.
Then second we will learn about the candlesticks, different types of candlesticks, then patterns based on candlesticks, based on candle, and after that we will learn the chart patterns. You might have already heard of triangle pattern or box pattern, right, sir?
Yes.
Do you know about
I read somewhere about there are 180 patterns as well, standard patterns.
actually you don't have to learn that much. We will be only learning about 6 of them, and all we have to do is understand the psychology behind them. Why do they form? Okay, sir. So patterns
Okay.
we will learn. And after that we will see the about risk management. Risk management is actually the most important topic according to me, because see, even if you learn everything about the market and you don't know about risk management, then there is a huge chance that you might end up losing the money, because if you take proper risk, there are multiple things. We will see that later. On the basis of those we can manage the our portfolio. Next thing is the
Okay.
derivatives. Okay, sir. We will see derivatives, and we will see options and futures both in derivatives. Actually we are not focusing that much on futures. We are mainly focusing on options, because see, futures are a little expensive. If you want to buy future lot, those are a little bit expensive compared to options, but they are also a little bit safer than options also. After that, if needed, okay, if the people who have joined the courses need the explanation on see on the interface of their particular broker app, or if you want to learn about trading view or how to use trading view, then we can also take that. But after that we will take whatever the indicator we use. First of all, just wait a minute. We will see the basic indicators which are actually famous and people use more often, like the indicators which are based on Fibonacci and moving average. And later we will study about the secret strategies that we have developed on our own. So and actually these strategies are actually very good, to be honest, because they have at least 90% accuracy, one of those strategies. And the last one that we will be learning, it has the potential that if you choose only one stock, and if you are trading only when all the conditions are satisfied for that particular strategy, and you trade only on the basis of that strategy, then it has the potential to gain 50% of profit. Okay, so 50% of profit, I mean whatever amount you are using, it will, it can
Okay.
increase that amount by 50% or 100% in the duration of 1 month if you use only that particular strategy. But all the terms and conditions have to be applied there. Okay, all the terms and conditions must be satisfied for that particular strategy. Is that clear, sir?
Yes, clear.
Okay, see, so we will start first with the basic introduction of the market. So,
No, can I ask you a question for you?
yes, sir.
Okay, when you're talking about the derivatives, right? We are only looking at options, not for the futures, right?
Future
So how
we
depth
will see,
we
but
are,
yes, sir.
no, how depth we will be covering on derivatives topics? Because see,
See,
if I want to do equities or long term, because we will be not having that much capital
capital.
capital
Yes,
to buy and hold it. Okay, so
yes,
like people like me who has very limited amount. Okay, so derivatives are the right one to learn. That is what I'm thinking. I'm see, I
yes.
maybe
You
I'm
are right,
wrong,
but
but
see, the point that you have just said is that the people like us, okay, the retail traders, we do not have that much capital. Correct. Okay, sir. We usually have the capital around 50,000 rupees to 1 lakh or 2 lakh rupees. Correct, sir. The average people.
okay,
I am saying it is what the amount I just said. It is for more, most people. It is actually more than they can chew. Whatever that saying is. See, in case of future, the amount required for buying lot is way more than options. Okay, you can buy a C or P lot for 10,000 rupees or onwards. But in case of future, if you want to buy the lot, it can cost you around 2 lakh rupees, because
okay, okay,
the leverage that we get in terms of futures, it is actually very less. That's why future is a little
okay, understood.
expensive, and that's why we focus a little less on that, because if we have a better option, okay, in terms of options, we have a better thing to choose now. That's why we will focus on option. And actually option is more complicated, and it is such that you can learn it in such a way that you do not have to look at the chart also. If you are making a strategy, you can make your own strategy in options, and if you work properly on that, then you can create your own strategies, and you do not even have to look at the chart, and you will make profit. Okay, sir. But there is also
Okay,
a chance
okay,
of loss, but it is a good thing. Margin is also low because you are not looking at the chart, but the potential in options is more if you compare it to futures. Just
got
give
it.
me 1 second, sir. Just 1 second.
No issues.
Okay, sir, am I audible? Hello.
Yes, I can hear you.
Sir, I know that you have studied about options and futures, but there are also people that don't know anything. So actually, we will have to start
No,
from
no, no.
the
I'm
basic.
just see. No, no, I completely agree. I just have a question because when you start reading the book, a lot of questions will come up. As a basic introduction, I was raising my concern so that what we are learning, I will be clear on it. We will go with your speed only. I'm not jumping directly to derivatives or anything.
Okay,
We
it
will
will
go by
take
your
time
session.
because see,
We'll
we are
start from
taking 2 sessions per week now. So it will be a
no problem.
gradual, and we will be
I
learning
see,
throughout the week.
frankly speaking, actually, I don't have that money to invest immediately also. So I'm just reading and learning at this point of time. So
Yes,
it
yes.
take time. I'm okay with that. Even I need to arrange a capital at least for derivatives or equities, whatever it is. I'm the newcomer, and even I don't have a demat account, frankly speaking. So I have to start from zero. And
Okay,
I will be
so you
good
have
if you are
studied
going.
about technical analysis, you know, candlesticks, etc.
Not yet. No, no, no. That is why I'm attending the training. I
You
will be
don't know
attending your
anything about
training
candlesticks.
along with the. No,
Okay, okay. So don't worry. I got you.
I'm
I will. We will see.
I'm little very basic. I'm little very basic. That is why I'm expecting that I learn some
See,
basic
sir.
onwards so that I will not.
One more thing about the session is that see, I have designed this course in such a way that for the first four sessions, okay, if you see those four sessions, I can say that those are not the things that you cannot find on the internet. Okay, that knowledge is available on the internet. Frankly speaking, the initial stages, okay, what is share market, what is patterns, what are different types of candlesticks, that is available on the internet. But see, as we move forward, okay, but as I said, that that information is on the market, but you will have to search specifically for that. Because see, if I am explaining you what is the what I am telling you is that in the initial stages, so you, if you want to learn that particular thing, then you will have to search for that particular thing, and as a beginner you don't know that thing, right, sir?
Exactly. So no, no. What I'm expecting, why I'm here, I will give you a small information. I don't know much. I'm started, so I need to start from the basics. Okay. Yes, as you said, information is available from the internet, but internet not is everything. We need someone who guides to the right way. That is why I'm here. I'm expecting that I will learn the right way to learn and improve myself in a right direction. That is what I'm
Yes, sir.
here. Okay.
You don't have to worry
So
about it, sir, because see, what I say is that it is not actually a training program. Okay, I consider it as a mentoring program because even if our program is has ended, okay, you can later also contact me whenever we give a trade in premium group. You can ask me why we gave that particular trade. So it will be a mentoring program. We will mentor you how you can do it and why you have to do it. So you don't have to worry about it. First of all, we will see the terms, okay, the basics that you have to do. Then the part comes where you have to apply your own brain in order to make money. But there are some
sure.
standard things that you should have to know first. Okay, sir. So the
Okay.
first
Yep.
thing
Yeah, we'll
about the
constant.
stock market.
We'll go by
Yes.
your. We will
Okay.
go by your pace, your session. Okay. First, let's start from there. Then we can.
Okay.
If
See,
anything
sir.
required, right? If I need to know something more, I will reach out to you.
Okay, don't. Okay, right. See, whenever we talk about stock market, equity market, or share market, see, these are all synonyms. Okay, and all of these is means that it is a place where we buy and sell share at a traded value. Okay, this is the simple Yes, this is the simple definition of what is a stock market. Now there are also other markets like forex market and commodity market. But in equity market, the difference is that in equity market we buy or sell a stock. Okay, and what is a stock? It is a company which is listed in the share market. Okay, sir, is that clear?
Yes. Yes. I'm clear
You
about it.
already know
I'm
that.
clear.
So let's take another a simple example in order to understand what is a share market. So now suppose there is a company which has a valuation, just which has a valuation of 1 CR. Okay. Now suppose and this company decides to be listed on equity market. Now this suppose that this company needs a specific amount of fund. Now we don't know why this company needs fund. Okay, it might need that fund in order to increase its production, or it might need that particular fund for increasing for expanding its reach to the customers, or it might need that fund so that they can repay the debt if they have any debt on them. So they will, what they will do, they will dilute a particular percentage of their ownership to the people, and they will get money instead against that particular value. Now to raise the money, the company can go have the company have multiple options to choose from. First one is that if a company is a small company, okay, then they will go to investors. Okay, there are big investors and there are investing firms who have fundraising rounds. You might have heard of it, like Tiger Global. I think they do this kind of work. So small companies reach them out and they exchange the percentage of their equity against a value. Okay, so this is for the small companies, but when the company grows big, they need a bigger capital, and what they do, they try to list the company in the stock exchange. Okay, so when they list a particular percentage on stock exchanges, the exchange or the sebi gives them, first they will have to what they will have to decide how many shares they have to dilute. Okay, first of all, what is the percentage and how much they want to create the shares on the basis of that percentage. For example, this company is of 1 cr, and if the company decides that they want to dilute only 10% of the company, and they will, the total number of shares that the company has is, if suppose it is 1 lakh rupees, so it means that the company has listed on a stock exchange. It has diluted 10% of its equity. It means that the people, the general public can buy the company, and the total amount of the company that they can buy is of 10%. And the number of shares that is available of that company is 1 lakh rupees. Now, by the simple calculation, if the company is of 1 cr and the number of shares is 1 lakh rupees. Okay, if the number of shares 1 lakh rupees, then simply the price of one share becomes 100 rupees. It is a simple math. You just have to divide 1 cr by 1 lakh rupees. So it means that 100 rupees is the, just wait a minute, is the price of one share. Okay, sir. It is the same, as
Okay.
simple as that. It is the price of one share. 100 rupees is the price of one share. Now, suppose if you have 1,50,000 rupees and you want to invest in that particular company. Okay, and okay, you have to invest 1,50,000 rupees in that company. Now, if you buy the shares of that full amount, then you will get 1,500 shares of the company, and you will be 1.5% owner of that company. How we have calculated that is the total amount of shares that you own, that is 1,500 rupees, which you have bought from 1,50,000 rupees, and one share costs 100 rupees, and the ownership that you will have, it will be around 1,500 divided by 1 lakh. This much will be your ownership. Now, from all of this perspective, this is the perspective of an investor. Okay, the person who wants to invest in long term, he will buy and hold the share for the long term, in so that he believe that the company in the future will go up. If the price of the share goes from 150 rupees, or from 100 rupees to 150 rupees, then whatever investment, that is 150,000 rupees he has invested, he will gain 75,000 rupees on that, because he gained 50% of the profit. Okay, because he is looking for investment. Now, when a person looks for investment, okay, if he is investing in the company, the things that he has to think about before investing in the company is the, what is the business model of the company, what is the sector the company is actually work on, what is the market of the company, and if the company has any debt, and how good the management of the company is. After deciding, after looking at all of those factors, a person can decide whether to invest in a company or whether not invest in the company. So this is the perfect perspective of the investor. Now, investor has to learn about the company. Learning about the company for investor is extremely crucial, because if the company fails, he can lose all of the money. But if you are a trader, okay, we do not have to know about the company. Okay, you have to understand that all all a trader care is the difference between buying value and selling value. We do not care about the company, we do not care about the stock. And why I'm saying is that, because see, uh, uh, when a trader trades, he has to care only about buying price and selling price. Because he is spending only, he will be trading for only 1 day, 2 day, or a week, or a 15 days, and in that duration it is not possible that the company might fail, or it might fall or something like that. See, in case of wait a minute. So where was I?
We are talking about, we are traders and we don't care about the company value. We will be doing it for a day, week, or 15 days max
Yes, it is
as a
clear to you,
trader.
sir. We don't care what is listed in the company because see, whenever a company, we are not an investor. Okay, so we don't care about management. We don't care about whatever the sector the company is working. Okay, actually, I'm a little bit distracted because of the sound here, so I am not able to properly explain it here. But see, the gist is that a trader doesn't care about whatever the company is, and all of these things will change. See, whatever these things are, okay, the price of the company, the share of the company, whatever the price of the share is, it changes for the trader because a trader use leverage. Okay, for example, if the company share is of 100 rupees, okay, for this particular company, if we buy it in intraday, we can buy it for 25 to 28 rupees. It is just, we will see about that later in detail, but I just told you about it. It doesn't have, it was just to explain what is the share, and you already know what is the share. That's why I'm not explaining, giving it that much time. Okay, sir.
No problem. I'm good with
Okay.
it.
Now, yes. Now the second thing is that the history of stock market, why stock market actually started and how it started. See, in 16th century, we all know that East India Company, that is the Britain, they came in India and they sold their product and they later claimed the land. But there was also other company which was known as Dutch East India Company, and what they used to do is that they used to go to different regions across sea, and they used to sell whatever they had, whatever the product they had, and they would make a profit. And what they would do, they would take the profit back to their homeland, and it will increase the economy and all of those things. Okay. Now the thing that actually bothered the seller was that it was a risky business. First of all, because they had to go to a land across the sea, and and the technology was not that much high that they can navigate securely through the sea ocean. And because of that, many ships sunk because of the storm, and many ships got pirated at that time. So this, because of the sinking of ships, the sailor got worried, and what they decided that on the docks, okay, the sailors decided that they will divide the ownership of the ship, and they will give it to different people. Okay, so there were multiple rich people. What they did, they suppose they divided a ship into 10 parts, and each investor, okay, 10 rich people bought one part of that ship. And similarly, the investors invested that money in many ships. Okay, sir. So even if sorry, even if one ship sank in that situation or got pirated in that situation, so what would happen? The nine would return with the profit, and the risk involved was very less. For example, if an investor invested in only one ship, then what would happen? If that ship sunk, if after the investor had invested in it, he will lose all of the money that he had. Okay. But if he had invested the money in different ships, then even if the one or two ships sank, he will make profit because the risk involved in those ships was less. So because of this, what happened? The seller started to sell the parts, and the buyers, okay, the investors started to buy. Now this thing got famous, and many people, many investors reached out the docks of the ship, and many sellers who were not there, they came here in order to sell those ships. It became so popular. It became a Amazon wheel. You know, Amazon wheel, where it provides a platform where buyers come because there are many sellers, and where sellers come because there are many buyers. So it is a very successful business model, and because of this, this Dutch East India Company became very profitable. And at the time of 16th century, it became so big that at that time the evaluation of that particular company was 7.9 trillion. Now, I know that this data is of 2019, and just wait a minute. This data is of 2019, and at that time the Apple was not of $3 trillion company, but still $7.9 trillion is a huge amount, and this shows that how much profitable the business model of each Dutch East India Company was in terms of stock market. So the stock market started from there, and it was this place was situated in Netherlands. Okay, and now we know that particular stock exchange as Amsterdam Stock Exchange. Now, what is stock exchange, sir? Yeah, I will give you a new link in the group. Join through that link. Okay, sir. Just 1 minute. Okay, sir. I will
Sure.
explain stock exchange after.